Does your change in rating in Target today, or at least in Target, suggest that you think this is a very concerning issue, or one where you just have to move to the sidelines until we know more?
It's very difficult to know. When we look back at different examples of E. coli and food safety issues in the restaurant space, there's a wide variety of scenarios. You look at Jack in the Box in 1993, where there were 4 fatalities and sales were down 25% the first quarter. We're down 8 to 10% the next 3 quarters. Took several years to recover. Chipotle in 2015, sales were down 20 to 30% for a full year. But then you also have an example 2 years ago with Wendy's, where there was an E. coli outbreak and it was relatively contained, and we didn't even see a material impact to sales. And look, there's a lot of differences between these scenarios, but there's a wide variety of possibilities, and we think the uncertainty was not baked into a 25 times multiple for shares.
And the timing, Gregory, of this comes as well. How would you describe sentiment around the name in general? Is this the one where it's pretty positive, and so it's an opportunity to take a breath, pretty negative? Just kind of put it in context.
Yeah, so what happened is in the first half of this year, U.S. same-store sales had gone negative. The stock, which had historically traded at 23, 24 times earnings, had slowed to under 20 times earnings. Now with earnings not really being revised materially, the stock's up 24% in the last 4 months. And so the multiple had gone to 25 times, and there was a lot of enthusiasm. And a lot of that's been the U.S. business improving over the last 3 or 4 months. So it was warranted, but we see it as a lot of optimism baked in just as you got into the kind of $315, $320 a share stock price.
That makes sense. All right. Well, let's leave it there, at least for McDonald's for the time being.
We're going to move on to Starbucks now as shares there slide after the coffee chain pulled guidance for next year after sales plunged for a 3rd straight quarter. Kate, why don't you bring us up to date on what's going on? We have a new CEO at Starbucks who is trying aggressively to tackle some of the sort of fundamental issues that business is facing.
Yeah, certainly. So this is a real change in tone, in my opinion, and having covered the company for years. With Brian Niccols as its new CEO coming out with these preliminary results yesterday, missed across the board. Global same-store sales fell 7%. That was nearly double what they had anticipated. Also saw major drops in both the U.S. and China businesses at 6% and down 14%, respectively there. And so I think Brian Niccols looking to get ahead of this news cycle in releasing this and saying we need to fundamentally change what we're doing. What we've been doing has not been working. He had an open letter posted about 2 weeks ago, kind of laying out his priorities in this new role, saying that they're really going to focus first on getting the U.S. business on track. That's something that former CEO Howard Schultz had been saying in several open letters that he's posted in recent months. So it seems that that's going to be a really key area of focus. I think we can expect more changes in marketing. Starbucks is bringing on new marketing team members. It's starting to air commercials and also slimming down the menu, getting the menu right and getting the morning right, as he has said, as that's such a key demo for Starbucks. And they've been losing the occasional customer. So we kind of know what to expect next week, but it'll be interesting to hear more from him on that earnings call.
The stock has, Greg, been flat for the year so far. It's up in recent months, but flat for the year. What does Niccols need to do first, second, and third to turn the business around? And how quickly do you think the stock can turn around and reflect that?
I think the first thing, he just did it. He separated poor results from his messaging that he's going to give next Wednesday. What this disclosure allows him to do is focus the earnings call primarily on his goals of turning around the business and put this quarter in the rearview mirror. And he very effectively did that. I think the first thing we're looking at is this is the period last year where sales slowed. The end of October, they had a protest that came into the brand, and you are now likely going to see near-term sales start to inflect from very negative to maybe slightly negative. And that's going to be kind of the first step. And then I think what we're looking for is we're looking for the plan to actually improve sales. Kelly, I think you and I spoke maybe a month ago about the need to pull back on U.S. unit growth and U.S. development. We will see if he does that and if that's part of the plan. That's something we've been emphasizing.
I'm also curious, Greg, how he speeds up the experience there. If that's part of one of his goals, just kind of get in, get out, like you do at Chipotle, and then kind of in conjunction with that, make those who are trying to linger have a better time as well.
Yeah, I think he's trying to address all of that. Simplification is the name of the game, and a lot of that is sort of what Howard Schultz has been trying to emphasize in some of his letters as well, is getting back to the core coffee product and the coffee experience and driving operations and velocity in the store. He did a very good job at Chipotle with marketing and operations. This is a bigger lift. This is a different animal, but some of his strengths should play through.